Welcome. The people want to know, when do they click the buy or the sell button? At what price, what conditions? When do they actually enter that trade based on the market structure or the trend direction? And so I got this question quite a few times after uploading these 3 videos all about market structure, how to go about marking in your market structure in a very objective and rules-based way that's not open to interpretation, and then going through and actually testing market structure, showing how it gives you such a significant edge for price making its next move one way or another. And so I found these to be extremely valuable for traders who don't really know market structure, don't know how to do it the right way yet, and seeing just how important it is, how great of an edge it gives you. But a lot of the people, they didn't really care too much about the market structure itself. They want to know, when do I click that button? When do I buy? When do I sell? What's the time that I actually enter the trade? Great, we have our market structure, but I want to know when to actually buy, when to actually sell. So they want to get into that trade. They want to know when to do that. And so with just knowing the market structure, even though it gives you a significant edge for the next move one way or another, it doesn't actually tell you the exact entry price. When do we actually click the button and enter into the trade? So I want to first direct people to my 6-part trading lesson video series. Anyone who's wondering about actually looking for the criteria to enter, then you got to watch this 6-part video lesson series that I have here, discussing divergence, hidden divergence, momentum, also covering funding rates, open interest, spot premium, sweeps on significant levels. And so these are the things that you need to know for actually getting that entry trigger into the market structure direction. And so I suggest everyone watch these videos, but also in this video today, gonna cover some other things, kind of reiterate some of these things that I've already taught in many of my videos. But when we have a directional bias, we have our market structure already marked in based on the way that I describe it in this video, and this video. How do we actually get the ideal entry point? So gonna talk swing failure patterns, resets on an oscillator, divergence, hidden divergence with multi-time frame approach. So some really great things to master and know. Pretty much the only things you need to know: market structure, trend direction, multi-time frame approach, resets, divergence, swing failure patterns. These are things that are essentially all you need for becoming a profitable trader. So we'll talk about kind of what those types of setups look like here, swing failure patterns included into that mix, and get through some examples here and just kind of go through some hypothetical setups of what you could be looking for when it comes to actually pulling the trigger on an entry. Okay, so before getting into all of those examples, I want to give a shout out to my exchange affiliate, BitNex Exchange. These guys, no KYC, no VPN, and running a limited time exclusive deposit bonus for my followers. So between August 8th through the 31st, deposit 1,000 USDT, trade futures once, get the 200, 3,000, trade once, 500, 5,000, trade futures once, 700 bonus, and 10,000 USDT trade futures once, then 1,000 futures bonus. So check these guys out if you can't use most exchanges due to geo blocking restrictions. So maybe you're a US resident. I was a US resident in the past, and I know that I could not access most exchanges. So being able to use an exchange for trading crypto is kind of difficult in some countries, and these guys are great because they don't require any KYC or VPN. So check them out if you're interested, with my link in the description if you want to get access to this event. And any of my current users of BitNex can also access these bonuses as well. So let's go back here, talk about these swing failure patterns, and kind of go over some hypotheticals. So what would make for a great setup? So Let's just go into an uptrend here when our market structure is bullish. So swing failures in a bullish market structure environment. What do we want? Well, if we have on our 4-hour time frame, mind you, this is a 1 hour. Let's say we have a 4-hour reset on our stochastic RSI oscillator. So that means that our stochastic RSI went overbought and then to oversold in a bullish trend, right? So we're oversold on the 4-hour in a bullish trend. That's great. What we can do then is drop down to a 1-hour time frame and look for a regular bullish divergence or a shift in the momentum. So on this pullback here, we're coming to the downside. Our momentum fails to continue making lower lows. So we're making some higher lows here, higher than this lowest point, even though price continues lower. That's great. And then what do we get? We get a swing failure pattern here. So combining market structure bullish, trend direction bullish, we have 4-hour reset, and even an extra bonus on the 4-hour would be a hidden bullish divergence on the 4-hour and a reset on the 4-hour. And then we come down to our hourly momentum, bullish divergence, swing failure pattern. Now that is an amazing setup. We have everything pointing to up. Swing failure pattern is simply when we take out a low, but then reclaim it with a wick and close back above that level. So that's a swing failure. So we get the swing failure with all our criteria being met on all those other situations, then that is fantastic. Now let's look to our next one. So we have some swing failures here. Let's say that our 4-hour has reset. We have a hidden bullish divergence. 4-hour, we're still in hourly and 4-hour bullish market structure here. So there's no shift to being bearish. We want to expect and assume that this trend is going to continue to the upside, as was made apparent in these videos where I tested market structure. We want to assume that it's going to continue. So get some swing failures here. We don't get a swing failure on this very bottom here, but what we do get is our first regular bullish divergence. So hourly regular bullish divergence here. Look for that 4-hour reset here. 4-hour fully reset into oversold. Bullish divergence hourly. That is a solid situation there. So what you can also do is look for the high to be reclaimed. So what you could do is when this doesn't reclaim this low here, so this low here where it breaks down on this candle and closes below that level, you can wait until that's reclaimed before you actually initiate an entry trigger. Okay, so if the swing failure doesn't work out here at the bottom, when we get that setup with the bullish divergence, the 4-hour reset, then that reclaim can be that entry trigger too. So right, you can look for setups that I haven't covered already. There doesn't have to be the exact only ways that I have showed. There's many ways to go about it. Okay, so here's another one. So let's say we have our 4-hour reset here, stochastic RSI oversold, hidden bullish divergence 4-hour. We're still in hourly bullish market structure, right? So we're expecting it's just going to continue. How do we actually get an entry? Well, what do we see here? Well, we see that this has peaked twice down into this oversold territory on the hourly, which probably means we're oversold on the 4-hour as well. We're in bullish market structure. And so what can we notice? Well, we also have hidden bullish divergence on this hourly time frame. And so we have a swing failure here. Now that might be a trigger for you to enter into this expecting the next major trend continuation move. Okay, that's great. And then so as we come up here, we're don't get any more swing failures. Of course, we do have some other resets here. You could be looking at a 4-hour. It doesn't look like any significant pullbacks until right here. But let's see what happens. It looks like we may take out some structure here, or maybe it's over here. So we may take an entry on this one, on this bullish divergence, right? See this? So let's say our bullish structure on the 4-hour held and hourly held, and you want to trade this bullish divergence here, right? So our entry, we had a few swing failures, which is kind of a sign that we're getting ready for a bounce or a reversal. So we get that bullish divergence right here at the very bottom. And so we can look for that, we can look for that to be a long. But of course, what happens is we don't end up holding, and we end up flipping. So we come to the downside and we get into bearish structure. So let's look for some bearish swing failure patterns, which just happen to be at a lot of our perfect points of entry. And we see that we fully reset stochastic hourly multiple times into the overbought throughout this pullback, holding a lower high compared to our last structure high. And so we want to look, do we have that 4-hour hidden bearish divergence and reset? And then we have a potential entry trigger there with a swing failure pattern, bearish candle. Again, here, swing failure pattern, and we have reset. We are looking at bearish divergence here on our stochastic RSI. We're coming to the downside as price trickles its way up slowly. And so we get that swing failure, bearish candle, look for our 4-hour as well, look for that bearish pattern. And so that's what we're looking for, a combination of 4-hour, hourly, could be daily to 4-hour, could be hourly to 15, but you want to be marking in, knowing your market structure based on the way that I show it here, or you can do it your way as well. Just have a way that you know works well and that you've tested, and so you know how often the market structure is going to continue based on the historical data. And so definitely learn the way I show if you don't already have a method, or you can try out your own way of marking and market structure, as long as it's fully rules-based, objective, and repeatable. So that way you can test it without any bias or subjectivity. Okay, so check these 3 videos out about market structure, and then also this one if you want to actually learn about combining these different factors for the actual entry trigger. When do we actually pull the trigger to actually initiate an entry at the ideal place? And so one of the things you can look at is swing failure patterns. And so I'm just using a random indicator on TradingView. You can see how well these swing failure patterns when we have our directional bias intact. So if our directional bias is down based on the 4-hour structure, the daily structure, the hourly structure, our resets on the 4-hour, hidden divergence, regular bearish divergence, whatever it is, if we're downtrending, we want to be looking for those swing failures, bearish swing failures. We're not looking to buy. We don't buy counter market structure, counter trend. And then when we are uptrending, looking for those bullish swing failures on the underside of these. And you can just see how well these get you in, and how well these work. Not just the swing failure, but combining those swing failures with important aspects like regular hidden divergence. And you can just see in these recent ones, we got the swing failure right here before the bounce, and that's when we're off. And we also have the regular bullish divergence building up here as we come down to the lows. We're coming all the way up to the upside by the time we get down to these swing failures, and then that ends up being the ideal entry before this bounce. So that is going to kind of cover it for this. Make sure you check out those videos and also the 6-part trading lesson video series to learn about the actual time to enter in when we have market structure and trend direction already established. All right, thanks for watching. Have a great day.